Hey guys, welcome back to Live to Learn. This is Doug Montezella. Thanks for tuning in. Today I want to talk about the Trump tax plan. I'm sure you've heard about it because it's been buzzing in the news and it could bring pretty big impacts. So I want to give a high-level overview of how this is going to affect our paychecks, the stock market, and even the housing market. So to begin, the biggest change as far as income is currently there's 7 tax brackets and they're going to be reduced to 4 tax brackets. Without getting into all the details on the tables and the exact numbers, the biggest change is going to come to the middle high income class. So right now there's 2 tax brackets in the current set. From around 37K up to 91.5, you're going to be taxed at 25%. From 91K up to 195, you're taxed at 28%. So the current Trump tax plan is going to wipe that out. It's going to be charged 25% tax from around 40K all the way up to 200. So that tax bracket is going to see about a 3% decrease in income taxes. That's the biggest change there. So the next thing that I think is going to spur the economy, which might already be baked into the stock market after Trump's election, but was the federal, for the corporate income tax is going to be reduced from 35% down to 20%. So companies are going to see a 15% increase in revenue that they get to keep themselves. So this is already baked in the stock market, but it could bring big impacts. If this bill gets delayed through approval, we could see the stock market adjust pretty rapidly. So something to keep in mind, but as long-term investors, we know this is just noise and we need to keep our money and be unshakable in the market and see any dips as buying opportunities. So I wouldn't panic there. The next thing is the standard deduction. Without getting the details here, the standard deduction is just something that you can subtract from your total gross income, however much your employer gives you. You get to deduct a certain amount, and that's going to be whatever's left over is your taxable income. So right now, the personal exemption, the standard deduction, is currently $6,300. Trump is going to double that to $12,000. So you're going to see some income savings there. There might be a little bit less incentive to buy a home if you're looking to buy a home after the stock market happens, but a cheaper home, that is, because to itemize your standard deduction, you would need to at least have greater than $12,000 of write-offs that you can come up with. So you would need a larger house or some really big tax write-offs or contribution to charity to be able to make up for that. So the whole idea is having this doubled standard deduction is going to help people save more money to buy houses, is the current thought process. Makes sense. So lastly, I want to talk about how this could affect the housing market. So there's some big changes to come. So right now, there's no necessary limit on the deductions you can take come tax day on the property tax that you pay. But Trump is proposing a $10,000 cap to that. And what does that mean? How's that going to affect the stock market? I think people are going to be less willing to buy more expensive houses. So you could see the demand for more expensive houses in high property tax areas go down not significantly, but a little bit, because people aren't going to extend themselves as far if they're not going to get the tax breaks to offset that additional cost. And states like Texas and New York, real estate taxes are relatively high, so it's pretty easy to get over $10,000 of property tax, and you won't be able to get any benefit from it come tax day. And lastly, which I'm kind of bummed about, but if this gets passed without any changes, currently, if you were to sell your house and you lived in it 2 of the last 5 years, you'll be able to get $250,000 of capital gains tax-free off the sale of that house, as long as you live there 2 of the last 5 years, which isn't that much. So what people do right now is they live in a house for 2 years, jump to the next one, rent out the previous one, and continue that cycle. And getting the tax breaks is super important. And you can do that once every 2 years. But Trump's going to throw a wrench into that. And the biggest change is the threshold's still the same. You can get up to $250,000 tax-free capital gains for a single, or $500K for a married couple, capital gains tax-free. But now you have to live in that estate for 5 of the last 8 years. So there's a lot less incentive to keep jumping properties and renting out the last one, because to get those tax benefits, you need to live there 5 of the last 8 years, which is a significant period of time. And currently, your salary doesn't come into play with that 250K that you could get tax-free. So now, so let's say you made 100K. Trump now subtracts your current income from that 250K threshold. So you made 100, you can only get 150K now of capital gains tax-free from the sale of your home. So these could have some significant impacts for people who like to continually buy properties and rent out and be able to harness the tax benefits associated with those moves. So hopefully this gives you an overview. There could be more changes to come, and it'll be really interesting to see how this approval takes place in the White House. So stay tuned for more, guys. Thanks for tuning in, and subscribe to my channel. Click here. Bye, guys.